Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the closing edition of Market Today. Last half an hour of trade and how are the markets poised to move forward and what's the outlook going forward. That's something that will be our focus. Remember, we have toyed with the idea that 25,900 was with us for a bit and the markets have attempted to again move towards the 26,000 mark. We have seen some volatility at those higher levels, but still up by about 200 odd points on the Nifty at 25,890. Let's try and find out where are the markets headed from here. Mr. G. Chokalingam from Economics is now joining in to share with us his views on the markets. Welcome to you, sir. Good to have you with us as is always. What's your sense and how are you looking at this fresh momentum? Do you think this will have enough and more wings for the markets to yet again surge beyond 26,000 and make another attempt to reach or retest the previous highs?
Certainly, yes. That's my conviction, strong conviction. By end of this current calendar itself, Sensex and Nifty can create an all-time record high.
Okay.
They can go up at least another 3 to 4% also from current level. There were only two concerns. One is on in the state assembly election, and now it doesn't look like it's going to give any fear to the market. And second, once again, Mr. Trump had made a very positive statement regarding this trade war he has initiated against India. So these are the two new developments. Otherwise, we were already enjoying good news like good monsoon, 90% storage in water storage in the major reservoirs, and the Rabi crop area going up substantially on year-on-year basis. And then you had a GST reform, direct tax reform, credit growth in double digit, a lot of FTAs with many countries. So there are a host of factors along with assured 6% GDP growth for current year as well as for next financial year. So in this background, these two developments have given more confidence to market today, and therefore I am very bullish on Sensex and Nifty. However, there is a lot of liquidity constraint because a lot of money got chucked out by the primary market from the secondary market. So there is a pain in small and mid cap. A lot of stocks are not participating in this recovery in the last 10-15 days. And unfortunately, till December end, I believe the broader market, small and mid cap, would continue to lag behind Sensex and Nifty. And in case there is any small negative news also, this pack can crack. Interestingly, almost 1/4 of the small cap stocks and mid cap stocks have already fallen anywhere from 20 to even 30-40%. So that pain would continue. So therefore, the investors have to restructure their strategy for equity asset class, in the sense at least 40-50% should be allocated to large Sensex and Nifty stocks. The balance 40-50%, 60 to 50 to 60% for small and mid cap, but the bias should be towards large small cap and large mid caps. So that way one can possibly avoid more pain coming to small and mid cap. And also within small and mid cap, they can go after very appealing story, because even though the broader market, particularly the small cap, mid cap will suffer, there will be a lot of individual stories which will continue to get attraction, because every week 6 to 7 lakh investors are coming to the market for the first time, and the base is continuously expanding. And this base of retail investors focus would be continue to be on small and mid cap. So therefore, on a broader level, the whole pack would have a pain, but there would be a lot of individual stocks, their stories on the basis of merit, they would unfold and keep creating a significant return. So one should be aware of these, propositions, and before start investing aggressively in the equity asset class at this juncture.
Okay. Let me also ask you on what's actually buzzing on the D Street. We will of course come to all the stocks in the secondary market that are buzzing, but debut stock, look at Grow, how it shot up on day one. Remember, we had a 14% premium listing on Grow IPO, 114 as against 100 rupees of an issue price. But look at the stock today, Billion Brains Garage Ventures, 33% higher at the day's high point. Significant volume surge after the second half of trade, and in the last last 1.5-2 hours is what we have seen on this one. Remember, the grey market premium was only indicating a 5 to 10% surge. But what has happened on the day one is substantially higher move, and which is why it is very, you have to be very, very cautious with what you see on the grey market premium and don't take it as a clear reflection there. Let's try and understand this. Mr. Chokalingam, how are you looking at this company and the day one performance? For those who have had the IPO allotment, they have a lot to celebrate on day one itself. And for those who may be looking at it afresh as well, what is your guidance to both now?
Yeah, but after this kind of phenomenal opening, valuation comfort is not there. But if I say you sell today, then I may go wrong because it depends on so many other factors. So be cautious. If you are taking a fresh position, be cautious. I would only give a suggestion that, if profit can grow at 40-50%, you be prepared to give, 80-100 PE. So roughly, that is the only, the guiding force in a market like this or in stocks like this. So if profit growth is 20-30%, don't give 100 PE or more than that. Not only for this stock, but in general. And one more point is that, let us not forget the fact that India has got extraordinary talent from the young generation. And there are a lot of entrepreneurial families. They have got a young generation, which are all looking at a lot of new opportunities, particularly in the digital-based businesses. So competition is going to increase across all segment of digital businesses. And I'm not talking about this particular stock, but in general, I'm saying that, it is very difficult to build fixed assets, but it is not that difficult to build, the digital intangible assets and create attraction in the market. So be aware of this and be cautious while chasing. I always say to the retail investor that when you miss the bus, don't try to chase the bus from the back door. If you successfully will get a seat, but if you are making a wrong step, you may lose life also while chasing the bus. So that is an analogy I always use in a bull market for chasing stock which are already rallied, which are not supported by the fundamentals. So
okay.
Yeah.
Got that. Let me also just talk to you about Tata Motors Limited. That's the newly listed stock today from the commercial vehicle segment business as well. Day one, that's also, holding up about 25% higher at 326 odd levels. What's your suggestion here? And how are you advising clients now? For those who may be asking you, should I go with passenger vehicle stock now or should I go with commercial vehicles? There is a choice of two Tata Motors stocks now in the stock markets. How would you assess both?
So on a lighter note, I would, instead of giving suggestion first to the retail investors, I would give suggestion to entrepreneur. If a stock is underperforming, go for demerging and listing on a market. So probably you can help shareholders. Coming particularly to this stock, yes, between Tata Motor, passenger vehicle and the commercial vehicle, I prefer commercial vehicle that is newly listed stock. Between these two, this is better because the passenger vehicle segment stock, the company, it has exposure to global businesses in terms of JLR. Even its subsidiary Tata Technologies depends heavily on the global market. And third, the EV space also, it's a long way to go to pick up the, the steam in terms of the big volumes. So whereas the Tata Motors CV, it's a domestic play. Not only directly, even through its investment in Tata Capital, it's a play on the domestic market. Though the CV business offers lesser margin than the global business of other company, I would prefer Tata Motor CV for the medium to long term because I'm very confident that the domestic demand outlook is going to remain robust, and these kind of businesses which depend on the domestic economy and demand would do relatively far better than the companies which depend on the global businesses.
Okay, got that. Let me also, try and understand what's happening on the broader markets as well as on the main exchanges, since you did talk about some of the stock opportunities there. IT stocks are coming back into flavor. Let's start off with that. Top mover for the last couple of days as well. Today also up by about 2%. If we look at the last 1 week's momentum on Nifty IT, the last 3 or 4 trading sessions will only give you that kind of a move. So 4% uptick is what probably probably 4.5% uptick has happened only in just the last 3 days for IT stocks. There is some sense that we are also getting is that in the US, Mr. Donald Trump again has come out with certain statements that indicate that he is making a U-turn on H-1B visas. Yes, yet again, he is saying that he needs talent from outside and he can't just stop people from coming here because the country needs them. So when such statements come in, what does it augur for the IT stocks, and how would you look at this one?
In fact, I believe Mr. Trump is making U-turn on India itself, not only on H-1B visa, because after India remained very stubborn, he has not come out with any aggressive further tariff war against India, and rather a lot of friendly statements are coming. So I think there is a real thinking, there is a change, in the perception regarding the tariff war against India. So it's a very welcome move for Indian economy and markets. So that is one of the reasons I believe is driving up technology stocks today. His friendly his statements, which is very friendly as far as India's U.S. Trade is concerned. And also, this sector was beaten down a lot, and therefore there is opportunity for short-term investment or tactical investment opportunity. But however, for medium to long term, I still believe that even if US doesn't make any aggressive move against IT sector exports to US, it's not going to grow in double digit, not even in very high single digit of say 8 to 9%. It is going to remain at around 3 to 4% in dollar term on a year-on-year basis. So therefore, at best, all these large IT stocks can give possibly a trading opportunity or short-term investment opportunity, but they are most unlikely to create a lot of wealth. So I would suggest looking at these large IT stocks like Infosys and all for defensive purpose and safety purpose in the equity asset allocation. But otherwise, I would suggest to focus on very, very high quality mid-sized IT companies. And I continue to maintain my view that what happened in 2014 to 2019 in terms of, a lot of mid-sized IT companies being taken over as large companies are not able to grow. So that kind of scenario can be repeated again. I believe one or two consolidation is still possible in the IT sector involving mid-sized IT companies. That could be a great opportunity. So therefore, look at a small and mid-sized company which have got a good management, time-tested business model, at least for last 10 years, and also most importantly, trading at a PE of in the range of around 20 or 22, 25, and also the IT revenue, annual revenue. And compare with enterprise value, that should be in the range of 2.5 times, because that was the parameter norm when we saw the last acquisitions during 2014 to 19. So many companies were taken over around 2.53 times enterprise value to annual IT revenues. So these are the suggestions I would give as far as IT sector is concerned.
Okay, fair point. Let me also look at some of the other key aspects in the markets that are driving up momentum. We also have a lot of auto names that are doing very well. We discussed Tata Motors, but even beyond Tata Motors, are you looking at any opportunities, Mr. Choklingam?
Certainly, M&M one can consider, and also Bajaj Auto, because it's a very fabulous news that the last month it has captured the number one position in two-wheeler electric segment. And I believe this company, cash-rich company, can go take any amount of effort to maintain the leadership position, or at least a second position, if not one, and continue to grow in a big way. And that has got a very good unlocking potential. And also, export of two-wheeler is quite robust for Bajaj Auto. And apart from that, I am extremely bullish on the tire stocks, because there is a spurt in the automobile sales, and there is a significant correction in the natural rubber prices in the domestic market. Crude oil price also down almost about 22% from the 52-week high, and it is expected to go down further. That is a forecast by OPEC and many more international agencies. So that is going to help tire stocks in a very big way. So I continue to recommend tire stock, particularly MRF, which is a leader. However, I do not personally own any of the stock which I have discussed so far on this channel now.
Okay. Asian Paints earnings have come in, so let's focus a little bit on that. The stock has suddenly reacted 4-5% higher in trade amidst the earnings. Remember, domestic decorative business volume growth is coming higher at 10.9%. This is vis-a-vis the street estimates of around 4 to 5 odd percent. Look at that sharp spike on Asian Paints right now. 5% higher. It's among the top movers on the Nifty right now. That's as far as the earnings have actually come in. Remember, we are also looking at the net profit, which has come in at 1018 crore rupees. This is also higher than what the street was penciling in, anywhere between 850 to 900 crore rupees as well. Revenue, when we see, has also improved. We've seen EBITDA at 1500 crores, again higher than the estimates. Margins have come in higher at 17.6%. Vis-a-vis, there were street estimates of somewhere around 16 odd percent as well. We're also looking at this net profit figure that has jumped 46% at 1018 crore rupees on a year-on-year basis from 693 crore rupees year ago in the same quarter as the company had posted, and that is what has also led to this very sharp spike on the stock, because the bottom line has improved. Look at the revenues, also 6.5% higher, but the bottom line substantial move. EBITDA is improved by 21% at 1503 odd crore rupees, and margins are higher at 17.6% vis-a-vis 15.4% on a year-on-year basis. Let's try to understand this much. Mr. Joklingam, I've given you the key highlights of the key metrics there. What's your sense on Asian Paints earnings? Finally, is the downturn behind us when it comes to the earnings performance for the last quarter over quarter? I think over 1.5 years we've been seeing disappointment come in. Is it finally coming out of that underperformance in earnings?
Certainly, this is beyond my expectation. Even I have gone wrong. I have not expected this kind of double-digit volume growth, so I have to accept it. But still, it is little early to assume that it has come out of poor growth and it's going to consistently beat the competitors, because both competitors are from the big industrial houses. So therefore, I would not make that assumption. But then still, the big positive point is that, as I already discussed, the oil prices are down. That is also driving up the margins for paint companies. So Asian Paint is benefiting from that, apart from the volume growth. So I would suggest a hold on Asian Paint, and at least wait for one more quarter to see whether this momentum in the volume growth is maintained, how the reaction of these big competitors. But otherwise, I would give a hold recommendation on the stock at this price.
Okay, got that. Let me also then understand from you, from within the paint space, is Asian space paints, or are there other paint companies that you truly like? I think you marked out a few for us in the last couple of conversations, like Indoco Paints or something. What's your suggestion on the paint space? Where is your comfort level?
I am still a little nervous on the paint space. So if at all one has to go after a paint company, then you stick to only Asian Paint is a leader, because it has already proven its performance. Why I am saying is that the new capacity which is planned by both Grasim and Jindals, would estimated to be close to 50% of the existing capacity. This expansion ultimately. So which is going to create a pain. So therefore, still if one has to buy any mid-sized paint company, based on the recent, the valuation multiple we saw, anything trading at enterprise value to annual branded sales of paint at less than 3.5-4 times, if at all it is available, less than 4 times EV to annual sales, that is could be an approach to look at paint stock, because that is the kind of valuation we saw when a couple of firms were interested in taking over existing paint companies. So otherwise, just hold on to Asian Paint. In case it corrects, one can consider Asian Paint as a leader.
Okay. Let me also just try and understand what else is buzzing on the D Street right now, and bring your focus there as well. We have even Adani Group stocks picking up pace. Have you been assessing any of the fresh momentum that's coming in, or do you still feel that there is a lot of time left before there is a sectoral, entire conglomerate-led move that starts?
I would, recommend Adani Port among all the companies. That is one stock which always gives me a lot of confidence, because perennially India's imports are increasing, and though we have a problem in maintaining growth in exports, imports are growing. That has to do with India's population, India's domestic GDP growth. So Adani Port would be a major beneficiary of this perennial growth in international imports from the foreign countries. And now with the Trump statement, it looks like even the 20% of India's total exports, which is going to US, may not be affected badly. So therefore, among all Adani Group companies, I would favor Adani Ports for long-term investments.
Okay. Let me also just bring up some of the other key stocks there. Okay, pharma stocks are also picking up pace, Mr. Chokalingam. What's your suggestion there? We've been seeing a lot of action on the domestic pharma space also because of this entire weight loss drug and how more and more companies from within India are partnering with these global companies which have their weight loss drugs are now available in India for their distributions. So we've seen Cipla with Eli Lilly, we've seen Emcure with Novo Nordisk, and many companies are also, in the process of building up their wealth, weight loss drugs portfolio. What's your suggestion right now on that?
It is certainly positive development. Foreign companies tying up with the companies like MQ to distribute weight loss drugs. But very interestingly, the stock is not appreciating that. Like MQ. So that I think the market has got rational in explaining this. That is, there are too many players who are getting into this weight loss drug. So we know in the last two decades, in most drugs which were off patent abroad and which were imitated here, the prices have been falling, the margins have been falling because of sheer competition. So that is likely to happen for weight loss drug as well. And second, even if Mr. Trump becomes too friendly for India, as far as pharmaceutical exports are concerned, I am sure he is not going to allow very high margin for any pharmaceutical product imported in the US, because he has already warned even US companies to reduce the prices and reduce the margin and help the people. So therefore, there would be a little bit of constraint as far as realization from US market is concerned. So in a nutshell, I would say that you focus on still the domestic pharmaceutical companies which have got a least exposure to US market. That is a suggestion I would give on pharmaceutical companies.
Okay, fair point. Let me also then pull out some of the other key stocks. Mid and small caps are also doing very well now. Mr. Chokalingam, you began by saying that it was the large caps that have drawn the attention of investors so far in this year, and that has led the show. What about mid and small caps? Do you see any green shoots there emerging? Finally, are they coming out of consolidation? Are the valuations also comfortable now there, or still do you think it's going to be very, very selective pocket within mid and small caps?
It would be very selective because, as I mentioned, the liquidity constraint I am able to see. A lot of small caps are down. IPOs have taken out more than 1,30,000 crore. Earlier, a lot of small and mid cap promoters have sold the stock, but still, there are very attractive ideas, available. I believe beyond December, many of these attractive storytelling small cap stocks would do extremely well. In case you are interested, I can share it's a couple of ideas.
Okay, fair point. Let me also just pull out some of the other key spaces that we could be drawing the attention there. Okay, let's focus a bit on commodities, oil and gas and metals. What's your thought process here? Is the commodity space also getting into a favorable zone?
Certainly not, I believe, because the macroeconomic news from China is not comforting us, and nor from US because of the tariff war. Ultimately, the tariff war, will increase the duties on all imports into US, and that would mean both China and the US will be affected, and global growth will be affected. In fact, next year external trade is expected to be almost near zero as per the United Nations agency. So I believe India's story would be strong, whereas US and Chinese economy would have a slowdown. That would mean a slowdown in the demand for both oil and metals. So short term there could be trading opportunities, but I believe for medium to long term, that is beyond 1 year, these two segments would have a lot of pressures. So I would avoid. There are a lot of appealing stories available based on the domestic demand theme.
Okay, fair point. I hope this has also helped you all. There's just about 6 minutes to go before the market shut shop, and we're still holding up above 25,850 odd mark. Although we have seen some profit taking right from the higher levels of around 25,900. We've seen some pressure, but let's see how this really pans out in trade. What else is ticking is the banking space and the focus on PSU banks for some time now. There is a lot of buzz around mergers coming in ahead, foreign ownership increasing, so many of triggers that are awaiting to get any clarity. What's your approach on the PSU banking space as far?
I still remain extremely bullish on public sector banks. I do not own any bank, but I am extremely bullish. Recently, we started covering Bank of India. It is trading at a one-time price to adjusted book value. So it has got 15% of the total business coming from the global business, outside India. So I believe that this is a great attractive stock within the public sector bank, apart from Bank of Maharashtra and Central Bank. So these public sector banks, they have got a very high CASA ratio, and they have improved the asset quality to near record level. It's the best in the last 10 years. So and there is industry tailwind also. The industry credit growth continues to be at around 11%. There are very few sectors still growing in double digit, and this is one of the sectors. And last consolidation in the PSU banking space delivered a very good results. The valuations already got upgraded. So another consolidation will certainly improve the valuation of the most of these PSB or public sector banks. So this is a one sector I have a very high outperforming rating among all the sectors.
Okay, high outperform rating for PSU banks going forward. Defense space is also seeming to come back into action. Last couple of sessions, you would have noticed how defense index itself has gone up. Today, there's some profit booking, and that too in the last half an hour, we've seen some profit taking. But last three sessions, the index had actually gone up pretty smartly. HAL, by the way, is in focus, 2.5% down. You've actually seen this sudden fall after the earnings have come in for the company. This is despite the fact that profit has actually improved by 10 odd percent and revenue has also improved by about 11 odd percent for the company, but the stock has actually fallen in today's trade. Do you think this is as a reaction to after the buying has already happened before the earnings, or how are you looking at the earnings of HAL come in, and what's your suggestion on overall defense space?
HL, I have no view on the the Q2 results, but it's a good stock to hold or even buy for medium to long term. But otherwise, I would be a caution on defense sector, because as per the latest reading from the government sources, there are thousands of companies which are bidding for a defense project. So the competition is going to be extraordinarily intense in the defense space. So better you stick to just a couple of names like HAL to make a long term wealth.
Okay, fair point. Towards the end, Mr. Choklingam, any key stock ideas that you personally have researched and you would like to highlight for our viewers?
I am extremely bullish on CDSL, MRF, Bank of India, and also I am extremely bullish on Optimism Medicare hospital stock, which has come out with fabulous results. Today it has gone up. I don't suggest buying at current level. Whenever it corrects, one can buy Optimism Medicare. So these are the four small and mid cap stocks. I am extremely optimistic now.
All right, four key stock ideas towards the end of the session where Mr. Chokalingam is bullish for the long term. That's where you could clearly focus your attention on CDSL, MRF, Artemis Medicare, as well as Bank of India from the PSU banks that you could clearly focus on. Thank you so much, Mr. Chokalingam. Good to have you with us and discuss about various opportunities in the markets. Let's now start wind down. The session today, viewers. As far as the market's concerned, we've actually had a very good day pan out throughout the course of the day. We crossed beyond 25,800 in the morning. We also managed to cross beyond 25,900 after many days again. But now remember, there's again some selling pressure right at the top, but we held on to the crucial levels of 25,850 and beyond. Let's see whether there will be enough and more action even tomorrow and day after. In the rest of the days this week, and we could yet again probably make an attempt to cross beyond 26,000. The names on your screens that are higher: Asian Paints, sharp 6.5% momentum, better than expected results coming in on all fronts, profits, margins, volume growth for domestic business, even revenues, you have seen a momentum built up there. Adani Enterprises up by 5 odd percent. HDFC Life, Bajaj Finserv, Adani Ports, Bharti Airtel among those other top movers on the Nifty. IT index, top moving sector in trade today, almost up by about 2 odd percent. Autos were following in close, 1% higher for this one. Pharma, small caps also pulled up, oil and gas, infra stocks. These were the pockets that moved up in trade. On the downside, however, the stocks that declined. BEL today 1% lower after many days of move. On the higher side, Grasim declined, Bajaj Auto declined, Axis Bank, HDFC, ICICI Bank. Private banks, the major heavyweights, those fell in trade today. Among the sectors, you saw metals and realty also crack a bit, but that's the closing level for you, 177 point higher, 25,872. And of course, we should mark out towards the end two stocks that have started their journey on the stock markets today. That is Grow, IPO that got listed with 14% move. This is Billion Brains Garage Ventures, the parent company of Grow. And therefore, you now see a 28-29% of an uptake. Remember, it went up 33-34% during the move on the day one, and therefore you've seen some pressure there as well. Some people have booked out the profit at about 30-32% kind of a rally that we've seen. Tata Motors Limited, which now represents the commercial vehicle business of Tata Motors, got listed at 330 odd levels, closed also around those levels as well, 26% higher, moved up quite a bit from there too, but has come down to end at the same level. Some textile related stocks like Indocount, Parag Milk Foods also moved up, Yatra Online moved up in trade, IOL Chemicals, Kirloskar Oil, Cupid, talk about names like Monte Carlo Fashions. These were the names that actually moved up in trade. Remember, Monte Carlo is into the winter clothing, and with the winter season also coming in, that's also moving. Tejas Networks moved up in trade as well. So all of these stocks, they managed quite a bit of move towards the end of the session. So stay tuned with us on to Business Today Television. Even beyond the market hours, we will of course get you all the news and the buzz that you need to know from the world of business and finance. And of course, we'll be back for the morning market trading action right at 9 a.m. tomorrow morning.
Blast. And now